there is kind of a lot going on, right? I mean, you said David Tepper on TV today, which I thought was a pretty big deal.
Yeah, David Tepper's always worth listening or reading anything he puts out for individual investors. I didn't think I like his laid back style. He just says whatever he wants. You know, he speaks his mind, not saying whatever he wants in a negative way. He just comes across as very genuine, straightforward, and honest, which I appreciate. He didn't say anything groundbreaking. It wasn't an interview, in my opinion, where you grab a lot of good sound bites, but that doesn't mean it wasn't a great interview. He kept his talent, in my opinion, is he just keeps it very simple. When he tells you, hey, you know, his famous call several years ago was everything's going to go up. Don't fight the Fed. Mm-hmm. He's essentially saying that now, leaning towards the bearish side, because what we've been saying and you've been saying much more is, listen, how do you expect the economy and everything to go up and improve, stock prices, businesses, everything improve when you have the central bank, the most powerful entity in finance, telling you they're going to make matters harder? He just, you know, as a society, and I'm guilty of this too, Frank, when you're a billionaire, you can talk about anything. People listen. Why? Because you're rich, and we value rich over here in the U.S. You can come in here and not have a clue about anything related. You could be Ralph Lauren himself and come in here and be like, "Hey, what do you think about Tesla?" And people would go, "Oh, yeah, what's this guy think about Tesla? He's rich, so he has an idea." You know, but he did a great job. He just said, "Don't fight the Fed," and I liked how he just, you know, I'm coming across a little bit bearish. No big deal, just a billionaire.
Yeah, I mean, he's a billionaire that, for me, he's my favorite in terms of if I had to name one investor that you know I believe in, that I would follow, who I think is brilliant. Right? You'll have that one.
Is he your favorite hedge fund guy?
I mean, I wouldn't classify him even as hedge fund. I would say he's overall, like, he's my Warren Buffett. Like, a lot of people look up to Warren Buffett and say, Warren Buffett's, like, to me, this guy, I follow him because of his calls. I follow him because I think he's more common sense. And we all have to be analytical at times and know the numbers and things like that. But sometimes you just have to take a step back and say, okay, common sense, what's going on right now? Okay. These rates are higher. They're going to hurt people going forward. They're going to continue to hurt people. That big pile of money that you accumulated because money was free is getting smaller and smaller. It's going to continue to get smaller throughout next year, right? So, you know, what he said in 2011 was something that changed me and really helped a lot of people listening to this podcast because, you know, navigating the markets back then in 2011, I really got it when he said it and made me get, you know, incredibly bullish because when you look at the numbers in 2010, they were horrible. We were, you know, even in 2011, stocks were cheap back then. But again, we're just coming off the credit crisis, a lot going on, and we never saw anything like what the Fed did when it came to bailing out banks and keeping interest rates zero forever and stuff like that. Like, nobody was familiar with that because that never happened in the history of the markets. And he came out early 2011 and said, listen, you know what's going to go higher because the Fed has zero rates of flooding market cash. He goes, everything's going to go higher. And he was exactly right. I'm like, holy shit, don't fight the Fed. You know, and I think from my standpoint, when you're looking at analytics and you break it down stocks individually, it didn't matter. What he was saying, numbers don't matter right now. Money is for free. Just growth's going to go through the roof. Just buy everything because money is for free right now. So your balance sheets are going to get better. You don't have to worry about debt as much. You know, it's easy to borrow money. You know, it's you have a little bit of also pricing power with a lot of these companies. So it was just perfect market conditions. Now, you know, for 10 years, what happened? The Fed kept rates low, and we saw one of the biggest bull markets in a generation. Now he went on and said the opposite. And I thought it was funny because when you're a news organization, you always want a great soundbite. And he didn't give one like, oh, the market's going to crash. You better watch out and run, right? Like nothing like that. Or, you know, people, from someone that's been on TV a lot over my career, if I can get on TV right away if I say that the market's going to go down 40% in a week, everybody wants to hear that. That's a great headline, right? Everyone's going to click on it. Or if, you know, Tom Lee's the biggest bull in the world. That's why he's always on right now because a lot of people are bearish, but, you know, he's bullish no matter what. And he's going to make a call even on Bitcoin and say it's going to go to 250,000 this year, which, you know, I think that was one of his calls. Regardless, they like to see that because it's a great headline. Despite that, I wouldn't tell you to watch a 30-minute interview, but it was important because he's like, look, I mean, we always say don't fight the Fed, but the Fed is telling us exactly what they're going to do. They're telling us exactly what they're going to do. Listen, he hasn't changed, Powell. Whether you hate him or not, it doesn't matter if you hate somebody or not. Right? I even say this policy. It doesn't matter if you're a Democrat or Republican. A policy is a policy. It's how could you make money off of it. He's raising rates. He's raising rates into next year, right? And he's going to keep them there because that 2% inflation rate, we're not getting, if we're at 4%, he's still going to continue to raise rates. And when I'm looking at what he said, he's saying, listen, it's a very difficult market. It's not just the Fed that's raising rates. Everybody's raising rates right now. 7 of the major economies are all raising rates, and they don't care. And they're going to continue to raise rates, which creates much tougher conditions. This should sound familiar to you because we said this for a year now, right? Of how it's a different market. It's different conditions. You're going to see rates rise. We haven't been in this. We've said this for a full year going through, right? And now look where we are at the markets. But going into 2023, guys, I hate to say it's going to get worse. Because we had a flood of cash, which is keeping a lot of these companies up, and they're okay, and they're still able to cut costs and things like that and buy back their stock. Going into 2023 is when you're really going to see the capital shrink as the Fed's shrinking its balance sheet. And that's what's going to hit so many of these companies. I don't know what the S&P 500 is going to be. It could be down 5%, down 7%, up 1%. I just know a lot of companies within there are going to see 30% declines when they're reporting earnings. I mean, you saw CarMax today is getting wrecked at down 10%. Now it's, you're looking... What was it? Close to 100 in September, and now it's 54, right? So, you're going to see these companies report horrible. Micron too, right? You thought Micron, okay, here's the bottom. They keep warning, right? That's what you're going to see going forward. It's the reason why we've been pushing money flow traders so much is this is a strategy that you can make an absolute fortune while this happens. And for our clients and subscribers to be saying, to be emailing us with the gains that they have in their portfolios, this is a dream for someone like me because this is the reason why I do this. Okay, we lowered the price of that product by 90%. It's a $5,000 product. We lowered by 90% because, and it's not for the full year, but it's for 3 months because you need to understand how to buy long-dated puts. It's one of the greatest strategies out there. I like to say like I'm some kind of genius with the newsletter. The newsletter's on fire for Money Flow Trades because Jenny Terranova, one of the greatest analysts. Very lucky hiring. Thought she was great, and then she's up over 30% of portfolio. She's killing it. She's got closing out winning trades like every 26 days on average. So it's like every single month. But, when I hear what Tepper saying and I see what's going forward into 2023, this is a strategy you need to have. You know why? Because if it doesn't work, that means the rest of your portfolio is probably going to do well. I'm not saying to go all short, get out of all your positions. What I'm saying is you have your long positions in there, and even we have our long positions in our portfolios. But when you're using that 7% to 10% to protect yourself, and it's not just a hedge because some of these things can go up tremendously. If you're seeing a 20% decline after companies report earnings, which you're going to see a ton of over the next 2 to 3 quarters, this is something that can make you an absolute fortune, this strategy. It's what I'm doing with my money right now, and I keep pushing it. So if you're interested at mftoffer.com, you go on our website, again, and look for it, okay? It's a pitch because I'm pitching it because it's something that's going to help you, and I've made this mistake before because I've always been a long investor, Daniel, that, okay, what happens if the market comes down? I didn't really have to worry about that for the last 12, 13 years, right? Because the market, every time it dipped 10, 15, even sometimes 20%, a couple of times it hit at 20%, it immediately came back because of the Fed, right? We're in different conditions now. The Fed's not there to bail us out. And they're going to continue to spend money like this next package that's up for 1.7 whatever. They're going to continue. Yeah, I'm afraid to say the trillion word, but it's going to continue to be like that, where inflation is going to stay stably high. And this is a way that you can make money in this market and have fun doing it because you're going to learn this strategy. So for me, Tepper is just reinforcing our thesis on the markets and saying, how could you really be long stocks here? And not saying that how could you, but it's going to be very difficult for stocks to move higher when you have the Fed and you have that constant headwind. Where you had the tailwind behind you. Now, what happened? Don't worry about it. Interest rates are low. Oh, temporary tariffs. Don't worry about it. 15, 20% decline. It'll go away. Easy money. It's not just rates, guys. They are going to come out and they are going to aggressively shrink their balance sheet, which is trillions, right? Trillions over the next couple of years are going to be taken off the balance sheet. And that's going to result in less liquidity, which it is going to be very, very hard, especially for growth stocks, to go higher in this market.